Hello everybody, and once again welcome to Synonomics, the money machine. Palantir was in news last night, that's on Friday, US time, as it actually went up 10% and closed at $17.81. Just to remind you, its 52-week high is $19 and 52-week low is 5.92. Yes, you heard that right, guys. It has actually given 169% return this year. So year-to-date return is 169%. The point to note and to point to consider is it still a good buy? And that's what we are going to analyze today. In fact, Wedbush Securities technology analyst Dan Ives actually initiated the coverage on Palantir and has given an outperform rating with $25 price target. And is calling it Messi of AI, Messi of artificial intelligence. So we'll actually look into that a little bit. And not only that, many of the institutions have started looking into this company and trying to see if they're missing out something. Kathy Woods of ARC Technologies, ARC Fund actually, she has invested, and I covered that in details in the previous video. So I won't repeat all of them basically. The point I'm trying to highlight is that now everybody, like the big analysts and the institutions, have started looking into that, and they're seeing if they're missing out on that. Guys, to remind you, Palantir is actually a software company which tries to detect unusual patterns in the large data sets. So it's a big data AI company. It has its own platform, one for the government, one for the commercial side. And recently it has actually added one more layer in its software, well, in the platform rather. It's an AI layer, they call it AIP, Artificial Intelligence Platform. The reason why it's a little bit uncovered, I would call that, is because a big chunk of its revenue comes from the military and government. Yes, you heard that right. 55% of its revenue comes from military and government organizations. And I have covered that in my previous videos as well. NYPD, FBI, CIA, all of them are its long-term clients. Also, Palantir is providing software support to Ukraine for the intelligence and the warfare, etc. So pretty much in that space, it's very active. And that's why it's not well known to many people or many analysts. So Palantir kind of going to be a real pure play AI stock. Yes, the artificial intelligence market is going to hit $1.3 trillion by 2030 from 142 billion right now, which was in 2022. So there's a huge growth out there projected, and Palantir is going to play a very important role there. Recently, Kathy Wood also purchased that, almost 4 million shares of Palantir. So Palantir, number one, invests heavily in the government and military operations. The software is used for that. Now they are actually driving more development and sales in the commercial space. It has a large partner base. And most important thing is that it actually enjoys a classified position in government. It gets very fast clearance from the cloud perspective as well. So kind of it has a huge potential to expand in the government, but the point is it going to be similarly successful in the commercial space? And looks like it will be, because 45% of the revenue comes from that. And I will not go and repeat those ones. I'll recommend you to have a look at my previous videos. I'll provide the link in this description. So if you look at from that the analysis perspective, financial analysis on investment analysis perspective, actually Dan Ives is giving it 10 times multiple of 2027 earnings to reach at $25 price target. So he is estimating, or he's forecasting 2027 revenue of something like $5 billion. Yes, this year, 2023, Palantir has actually given a guidance that they will exit at around $2 billion, and 2027, GenAi actually thinks that it will have a $5 billion revenue. If you look at from the balance sheet perspective as well, it's a pretty robust company. I like this company as compared to C3 AI because C3 AI is in loss, whereas Palantir has been giving positive results, revenue growth for the last multiple quarters. It has also given profit growth for the last multiple quarters, and it is actually in profit. I covered that actually. In the last quarterly earnings report, it actually had 5 cents EPS. In the GAAP terms, it was 1 cent EPS. And they are actually forecasting, or they are giving a guidance that for the whole financial year 2023, they will be profitable. And if you look at the balance sheet perspective, for an example, they are pretty much, their asset is $3.7 billion and their liabilities are something like $880 million. So the assets are extremely higher than the liabilities, and they are sitting pretty much on $2.9 billion cash. Yes, you heard that right. Almost $3 billion. 2.9 to be precise. $2.9 billion cash. So guys, from the financial perspective, looks like it's a robust company, and from the technology perspective, it actually enjoys competitive advantage of analyzing all these data, especially used for the intelligence purposes. So it's a big data software company which has a proprietary or the competitive advantage of data analytics, and that they can use for their AI platforms for the large language model applications. They can easily deploy that, which they are working on. So from that perspective, looks like even at 1781, it's a good buy in my perspective. And with Dan Ives' $25 price target, I think very soon it will hit $25 if there is no accident on the NASDAQ. So with that, remember, all these are my personal views. These are not recommendations. Don't forget to consult your financial advisor before making any investment decisions. Synanomics is out there to create financial awareness so that you can act on it, analyze your own companies, and make money. With that, if you like these kind of contents, don't forget to like, share, and subscribe. With that, it's a goodbye from your friend Pankaj Sinha. I'll come back with another interesting update for you. Till then, it's a bye. Bye-bye.